Hi, good afternoon, ladies and gentlemen. Welcome to today's session, overview of the stock market industry in Singapore and investment outlook. So my name is Ian Leong. I am the head of business development with Tiger Brokers. So for today's agenda, we're going to split it into three parts. First, I'll walk you through the overview of the local broking industry, and we'll have the CEO of Investing Note, Mr. Shenson Lim, to talk about the client investing climate. And we also, last but not least, have a Q&A session. So if let's say you have any questions to ask Mr. Lin or myself, you can actually type into the Q&A box in the Zoom meeting itself. So it's going to be an informal session between Shenison and myself. So we'll ask questions to each other to actually let you better understand the topics for today. And so without further ado, let's have Mr. Shenison Lim to actually introduce himself and also more on Investing Note. Hi, Shenison.
Thank you very much. Hey, hi, Ian. Thank you very much for having me today. And hi, everyone. I'm Shenison. I'm founder and CEO of Investing Note. So Investing Note is the first and also the largest social network platform for stock investors in Singapore. So we have a pool of very active investors and traders inside our platform sharing actively about investment. And last year, actually, we expanded our operation into Malaysia. It has been growing very fast, since then. So I think maybe a little bit about myself, So whenever I go for a talk, doing a presentation or those, a lot of people ask me, where are you from, right? That's kind of question. I think probably it's because my, this kind of Jabalan accents, right? Different kind of accents. So I was actually born in a small village in China, but at the age of 19, I came to Singapore, because I received a MOE scholarship program. So I studied in the NUS School of Computing. So, and then on the final year of my university, I decided actually to start up my first startup company together with two of my friends. But after 1 year, actually, we failed very badly on the first try, And then after that, actually, I joined a share investor. For those who don't know what is share investor, you can think of it like a mini Bloomberg for the investor in the region to look at the financial markets, to analyze the stock markets, and look at the tools. So I worked there for about 4 years, And during the 4 years, I picked up a lot in terms of the financial knowledge as well as technology, in terms of programming. So me and myself and the team actually built a lot of financial applications. And for these few years, actually, it shaped into what I am today. So I combine my passion in terms of financial markets together with the technology and actually created Investing Note. And then 4 years after this, our company has been growing very well. And then right now, actually, we are the biggest one in terms of a social network for Singapore. Yeah. Cool. So I would like to actually start something, in this webinar with Ian, because I think for this topic today is about, what is overview of the financial market industry. And I believe a lot of people here, right, they are not just regular investors who are looking for, investment tips or those, but they are probably like one who are professionals working in the industries. They want to find out more about the financial markets. There's a lot of exciting things happen, these few years about this. So Ian, I would like to start with a few questions with you first. So I think the first question is, I understand that Tiger Broker, they started, last year, it's been about 1 year. So I can see Tigers, growing very well in terms of growth, attractions. I can see them everywhere, So, but I think nothing beats actually hearing from the Tiger's mouth, right? So Ian, how is the growth so far? You want to share more about this?
Oh, yes, I'll share with everybody for Tiger Brokers growth so far. Yes, indeed, Tiger Brokers Singapore actually set up shop in Singapore last year in February, so we are 1 year old. But to give it more of a background for Tiger Brokers, what happened is we actually started our operations in 2014 in China itself. So technically, we are 7 years old this year. Yeah, so our parent company, it's Fintech Holdings. So basically, we are actually listed on NASDAQ. We list on March 2019 itself, ticker code TIGR. So when we first started shop, what happened was we catered to the Chinese investors in mainland China itself. So in 2019, we decided, hey, we want to expand worldwide to actually share our offerings with investors globally. So not just in Singapore, we actually set up a headquarters in US, Australia, to name a few places. So for the US, our branding is actually by the name of TradeUp. So they actually cater to the North American markets. So for our Australian headquarters itself, they actually onboard clients from Oceania. So apart from these two jurisdictions and of course mainland Chinese clients, technically any other clients who actually worldwide who actually wants to open an account with Tiger Brokers, it will be with Tiger Brokers Singapore. And we have the relevant licenses in all these jurisdictions. Ourselves is in Singapore, licensed by MES, CMS, capital markets license itself. Now, to share more colors, we actually a soft launch in Singapore last year. So it kind of actually coincided with the COVID pandemic, which also started about the same time. So what happened was we did notice asset prices, stock market prices was actually pretty depressed in late March. So what happened was when stock market, there was a drought. A lot of new to investing, new investors were saying it's an opportunity to actually enter the market. So those who have never traded before, they decided to open a trading account to invest in the stock market. So there was sudden influx of new investors. Yeah. So myself at that time, I was actually with one of the local brokers. So we had this problem because the influx was so huge. So what happened was instead of the typical account which can be opened within a few days, it took us 1 month just to open a trading account for one client. And this is for all 9 local brokers in Singapore. It was the same. So when we started to market our services in early April for Tiger Brokers and May itself, the 3 points whereby we always tell investors it's you're able to open an account, fund it, trade within hours, low commission rates along with a fantastic mobile application. Yes, so people start to hear about Tiger Brokers during that timing. Hey, this online broker start to actually have this service, and instead of me waiting for 1 month to open an account, I can get it done within, like say, in a couple of hours. Yeah. So what happened was we started with US, Hong Kong, and China markets. So in June last year, we actually offered our Singapore trading to trade in the Singapore markets, and in September we offered the AXX. And to make sure the client experience is so much better, in November last year, we actually introduced the DBS DDA service. So for all DBS bank account clients, you can actually fund your account with Tiger Brokers as good as instantly. Yeah. Now, at Tiger Brokers, what happened is our mantra, it's always very simple. We want to actually provide global markets and products to all investors in one trading application. So as mentioned, initially we had US, Hong Kong, and China market offerings, but we also expanded to Singapore and Australia, to name a few. Product-wise, we not only have equities, but we now also offer US and Hong Kong options, futures, and also funds. And within the next couple of weeks and months, we will have new products launching. So keep a lookout. Yeah. So in fact, Shannon, you were right. Our growth has been phenomenal for the last 1 year. To share certain numbers when it comes to client onboarding, our fourth quarter numbers in 2020, as compared to the preceding quarter before, our growth exceeds actually 110%. So this rate has been going on for every quarter itself, and every quarter so far, we have been hitting new highs when it comes to new investors and funded accounts. Yes, wow. Madison. Yeah.
That's impressive, Ian. Congratulations on the growth so far. Yeah. So I think before you guys came here, right, there are a lot of actually local stock brokerage firms here, right? There are quite a few over there. But when you guys came here, how do you guys actually differentiate, differentiate yourself from other brokers here, with the local guys?
Right. Okay, I will say we are a bit different, but nonetheless, let me share the local colors more. Okay, right now there is 9 local brokers in Singapore who are actually clearing members with SFF to serve the retail side of things. So most actually started shop back in the 80s, 90s, or even earlier. Like say securities, it's about 47 years old, so it's probably about say 70s itself. Now, for all these brokers, they all operate with the same model, of which what I term as the agency model. So what is this agency model? So basically for all these retail brokers, they have like say a trading representative, or in our terms, remisers and dealers to serve clients' needs. So if let's say an investor was wants to open an account. So basically, they will actually look for a reminder to open an account or with the house team dealers to do so. Now, the problem with this model, it's okay. Before I touch into that, what happened is the pros about having this model is you have someone to actually cater to your needs. So if let's say you need investment advice, financial advice, how do I do this? How do I do that? You have a reminder to actually to help you on that. But the problem with this model is that cost tends to be more expensive because basically the broking firm will need to pay commission to these reminders who are actually self-employed. So basically they have to factor this in terms of the trading cost, the transactional cost itself. So this is why all along the cost has always been much higher when it comes to trading for the local brokers. Now, to answer your question, how do we differentiate ourselves from the local boys itself? Basically, I like to see, and in fact, we see ourselves, Tiger Brokers, as firstly, a technological company with financial capabilities instead of a normal firm, which is see themselves as a financial company with technological capabilities. So this is the first difference. So instead of leveraging on a very big sales force or a lot on the, say, for example, operational staff, most of our staff is actually automated in terms of our processes. So when it comes to the account openings, most of it's automated with minimal human intervention. That's why it's able to open within hours. Our operational settlement methods is also automated. And in fact, we don't really have a sales force of reminders or dealers. So we actually market our services, as you are aware, online, online side of things. So this actually drastically cut down our costs. So with this lower cost, what happened is we pass down these cost savings to investors. So this is why we are able to charge a much lower transactional charges to our clients as compared to a traditional broker itself. Yes, and of course, apart from there, we can actually spend more money in terms of the R&D aspects to actually improve our platform, which is the Tiger Trade mobile app. So to summarize, Tiger Brokers, we see ourselves as a tech company with financial capabilities. Yes.
I think that's very interesting. Ian, when you guys came here, right? You are probably the one actually who really offers very low commissions at first, in terms of this brokerage first. So I think at that time, a lot of people actually are thinking, how do they actually make money? So I think now you guys already hear from Ian, so you know why actually they can offer this kind of low commission for you guys, really, right? So, and myself and also a lot of friends actually are using Tiger's brokers. But why do I like about Tiger Brokers is actually there are a few things apart from actually a low commission fee. They also have a very sleek, a very sleek in terms of mobile app. You just hear from Ian. They invest a lot in terms of R&Ds, in terms of actually bring the platform to the next level, right? So this is something actually is very interesting, especially for young investor who want to invest. You want to have very stylish mobile platforms, easy actually to invest, So if you haven't opened an account with Tiger Brokers, go ahead, ask Ian about any promotions. Okay, so I think next questions I have actually is, in terms of a choice, right? If let's say they are new, they want to open trading account, there are actually a lot of choice. There are local ones, there's online ones, there's even like some are actually both based in other countries as well, so they can actually open online easy as well. So the space actually is very crowded in a way, So how is Tiger actually going to evolve, and then what do you think actually in terms of the market, in terms of brokerage industry, what do you think is actually going to happen moving forward?
I hear you. Okay, to share a bit of colors, basically, yes, you're right. It's getting a bit crowded. It's getting a bit crowded. Competition is very stiff, keen. We have 9 local brokers. We have the online brokers coming in, and before us, there were a few online brokers itself. So how do we differentiate ourselves, or how do we stay competitive? All right. So just a bit of a background. Previously, I was with 2 local brokers for more than 10 years. So with one of them, I was actually head of dealing. The other one, I was actually the head of client services and representatives. So I like to talk to the investors. I like to talk to my clients at that time. So I'll be like, come, hey, share with me. It's are we your only broker that you use because you're actively trading with us? But what we gathered, majority of people do not just focus on one broker. They will have at least 2 at least two brokers whereby they trade very actively with. So that was when I actually approached more, come share with me more colors on this. Why? So a lot of investors, what they tell us is, okay, I like to use broker A to trade in the Singapore market because the commission is very, very low. But in the meantime, because their US market is not that competitive, so this is why I use broker B. Yes, and I could even use a broker C because broker A and broker B do not offer other products like say funds or options that I'm interested in. So all in all, because I trade in global markets and multiple products, I may use up to 2, 3, or even more brokers itself. So this is one phenomena whereby we noticed when I was with the local brokers previously. Now, as mentioned, competition is very, very keen right now. And in the States, we see the race to close to non-existent commission or even zero comms, like say what Charles Schwab is offering there. They really started it for more than a year already. So it's only a matter of time whereby say this will actually reach our stores or say in Asia itself. Yes, zero transactional costs. It's going to be in the future, that's for sure. And when it hit us all brokers itself, basically what happened is we have to lower our costs, that's for sure. But apart from that, how do we actually differentiate ourselves? So basically, there's two things that we actually need to do. One is to anticipate our clients' needs. And the other one, of course, is based on these needs, improve our offerings so our clients will have the best service and solutions. Yeah. Now, let me share a story in Hong Kong. Okay, as mentioned last year last year was COVID, unfortunately, but because of COVID, a lot of people actually start to invest in the market. So trading volume went up substantially, not just in Singapore, but everywhere else. So you would think like, say, for example, it's a good thing for brokers, but not exactly so in Hong Kong, actually, because in the booking space in Hong Kong, they have more than 100 small to medium brokers. But their modus operandi, it's very simple, which is what they have been doing, which is they actually provide a trading space at their office for clients to come in to trade, or for clients to dial in for broker assisted trades, which is a declining trend. But because of COVID, their clients couldn't come to the office space to trade, and because calling in tends to be much more hassle, so a lot actually evolved to actually using other brokers who provide online platforms. So in fact, there was quite a number of brokers which went down under last year in Hong Kong, the smaller and the mid-sized ones because of this. Now, sharing this, I just want to emphasize, end of the day, it's when it comes to our industry, yes, transactional cost is important, but it's only one aspect. So how we differentiate ourselves to actually stay lean, stay competitive, it's to, as mentioned, Tiger Brokers, we want to offer global markets and products to all investors all via our Tiger Trade app. So right now we offer the 4 or 5 main markets as mentioned. We also offer equities, options, futures, and funds. So we are adding more products into our solutions because end of the day, it's we anticipate what clients want to trade or invest in the future, and for us to meet up to the expectations, both in solutions and services. I hope I actually answered the question, Shanison. Now,
yeah, definitely.
the thing it's I've been sharing about like say the local broker industry. I kind of don't want to bore the crowd. Yeah, I was hoping if let's say we can actually touch more on like say the investment side of things. Yeah. So I understand, Investing Note is actually the biggest social network for investors forum community in Singapore itself. Now, given the increased trading volume, as mentioned, so is there any particular trend that you see that it's on your investors' minds right now? Yeah.
Okay. Thank you, Ian, for the questions. So we have been in the markets actually since 2016. So it has been quite a few years actually since actually we push our product into markets. So even right now, actually, we have about more than 100,000 of Singaporeans inside our platform. And on daily basis, we have thousands of posting and comments, so there's a lot of very active discussions about the markets out there. And then for me is I like to actually, observe in terms of what they are discussing. And then, this is a part of my job as well in terms of actually this. And there's a lot of interesting observations, right? But I think maybe allow me to cover two of them. The first one is actually, I think, is a portfolio diversification. For most of investors, especially for new ones, when they just started investing and trading, they will naturally want to focus a bit more in terms of their countries, their home markets. Even for myself as well, when I first started investing, the first stock actually I bought is actually listed in SGX. It's a company actually came from China, from Fujian, and that is my hometown. Because I can, it's because I can see their brands everywhere. They have stores everywhere, even in my small hometowns, and that is why actually I bought into the stock. So even now, we see a lot of actually people discussing about brands like DBS, Samsung is our platform as well. It's the same reason as well. They are familiar with these companies. They are more comfortable in terms of this, right? So they invest into this. But over the years, right, I observed there are growing numbers of people actually, they started to invest into overseas markets, like the US and Hong Kong markets. And even those people who actually initially just invested in their own markets, they start to focus on region. I'm not just talking about Singapore, but even like my friends who are in China, they are looking at overseas markets as well. And China has very vibrant equity markets out there. When everyone start investing, they start with China markets, but now they're actually looking at other markets as well. So this is actually one of the big changes I feel. People don't want to actually focus on just one region. They want to actually diversify risk, and then look at overseas markets as well. And even single markets, they have a lot of good companies. They have a lot of REITs. They also pay very good dividends as well. Even for myself, I also actually invest actively in US markets as well. But for that part, actually, I be doing a bit more active investing. But then I use the returns that I made from there. Actually, I funnel into the Singapore markets for those, index tracking funds, ETF, that's STI ETF, other REITs, and also dividend stocks. Because for me, at the current age, my purpose is actually trying to build a retirement portfolio for myself. Considering I have, 2 children as well. So at that kind of age, there is time for me to plan properly for my future, right? So this is actually the first observation. Right. Yeah. So I think second one actually is the one actually you probably brought up initially as well, talking about the retail participation, the surge in terms of retails, in terms of their participation in the markets, but at the same time, it's about their influence in the financial markets. But why I say actually influence in the financial markets, right, is because I'm being a retail investor myself, right? So I have a lot of friends actually in this as well. Like 2 years ago, actually, when we approached some of those listed company, and we say that, do you want to actually do some introduction to the retail investors, right? Maybe it can go through some webinar, or it can be doing some presentations as well. But some of those people, right? The companies, right? Sadly, they say that I don't really care so much about retail investors. I care more about institutions. I care more about research analysts. And I got there at that time because I feel that probably they feel that this is where the money is, right? So I don't want to spend too much time actually talking to retail investors. And in Chinese, right, there's a term for this as well. Sadly, they call a lot of retail investors, it's called 韭菜, like 韭菜. It's like, you're growing those trees, the grasses, then after you cut it, the harvest them. So the institutions is the one actually, looking at the retail investors, and then retail investor invest the money, but they're the one actually going to take the money from the retail investor. So being myself as a retail investor, I was actually quite sad when I hear about all these kind of stories. But the things I observe is very different, right? In terms of the influence of retail investors. Everyone hear about the GameStop, right? So in terms of retail participation, in terms of the retail versus institutions. So the influence of retail is really not simply to be dismissed. And one of the reasons is also because of COVID, right? There's a lockdown, people are staying at home, they want to invest in the financial markets, right? They want to find something to do. But for me, I feel that this trend about retail investor is actually going to stay. And one of the reasons is because like Tiger brokers, right? They make it so easy for people actually to open trading accounts and start actually investing, right? The barrier of entry is very low, right? 10 years ago, actually, when I start investing, right? And I need to open a trading account. I need to go down to a brokerage firms. I need to submit, physical papers, with my signatures, everything. And I need to wait about 1 or 2 weeks time to come back to me in terms of my accounts, for me to start investing and trading. So things have changed over the years, and it makes the retail investing much easier. The participation the retail is going to stay. So I think Ian, this is actually my two observations about the trend.
Right, I hear you. In terms of clients or investors who actually want to trade more in the global markets itself, and also an increase in the retail participation. Now, now that we see there is actually more increase, like say in terms of the retail participation rate, is there any tips that you actually want to share with new investors who to be better at investing itself? Yeah.
Okay, thank you, Ian. I think we are running a community. So I think one of the key value that a community provides is the helps that for other peers, right? These are the peer retail investors in the markets. So there's a lot of lessons actually they have learned that you can actually learn, without actually spending too much money and risking your money actually to learn the lessons. And over the years, I've seen a lot of retail investors, grow from just a new investor to be very successful investors. So even myself, I've been investing in the financial market for the past 10 years. And initially I lose a lot of money as well. I think I didn't manage a lot of things well at the beginning. When you just started investing, naturally what you're thinking is, I want to make money, let's do it, that kind of mindset, But now I think about it, there's a few quite important lessons actually, I need to really emphasize. And out of my mind, I think the first one and most important one actually is to manage your risk very well, And this is actually the most important one. When you first start investing, I think it's very important actually to measure your risk profile. And when I say actually risk profile, it doesn't simply mean that whether you are risk-averse guy or actually risk-taking guy. There are a lot of factors actually that can affect in terms of this. Like for example, right, what is your purpose of investing, right? And what is your age? We're talking about what is the purpose of investing, right? I know everyone wants to make money, right? That is your purpose for investing. You don't want to just invest for fun, right? But when I talk about this, right, for example, when I first started investing, or someone actually who just fresh grad, when you want to invest in markets, I believe probably the first goal for this is you want to prepare some money for your marriage, and then probably want to pay the down payment for your first house, right? That is probably your investment goal. So in this case, right, you probably even that you are a risk-taking guy, you are very brave, you're not scared so much, right? But you don't want to actually take in too much of risk, because this is come to your marriage, right? You don't want to risk of this, affect your marriage on this. So another thing actually is about age as well, right? So at different kind of age, you have different kind of time frame in terms of how long you can invest in the markets. Now, when I first started, actually, I feel that I'm young. I still, have probably 30 to 40 years before I retire. So I have, a lot more time in terms of actually investing in the markets. I can probably take higher risk. But if let's say you are at a, older age like me, after 10 years, right now I just mentioned I have 2 children as well, the family. So I need to actually prepare for them. I need to prepare for my retirement as well. So at this kind of age, I can't really take too much risk. I need to manage the risk very well. So what I do is, like I mentioned, I do some active investing, but at the same time, I actually funnel some of my funds into passive investing. It can be the index tracking funds. It can also be into the bonds as well. So the risk, it can, in terms of risk profile, it might change over the years as you grow, right? But most importantly, you must really remember, manage your risk very well, no matter when you start investing. And as a new investor, it's actually important, I think, to start with something small first. And when you at one go putting a lot of money in, right, the risk is higher. Especially the bull year last year, I think a lot of people hear about other people making money. So if you just started, you tend to put a lot of money inside. But when you do that, it comes with a lot of risk, right? So this is actually the first thing I think need to remember is actually the risk. So second thing I think is, you must always know what you are doing. Nowadays the financial markets, right, it has been growing, and it has growing in terms of it gives a lot of investors a lot of choice in terms of what they can invest, and it become a bit more sophisticated as well. There are different kind of product in the markets, right? There's options, warrants, or DSC. There's a lot of products out there, right? But you must know what you are doing before actually, you invest in the markets, and you just don't simply actually follow somebody else, right? And it's important that if you want to put your money into something, you must know what you are doing, and you need to have a very solid in terms of investing thesis, why you are doing it, what if it has happened, what are you going to do? Prepare all this. It's like an investing or trading plan before you actually put your hard money. The worst case is you open the chart, you see the chart is riding, then your heart become very nervous. Oh, I want to make money. I don't want to miss out. Then immediately put in money, That the time actually you might lose money. Even at that time you won't lose money, but in the long run, you are very risky in terms of that. I still remember actually 2 months ago, the Elon Musk actually tweet something in the Twitter. He say use Signal. Ian, do you remember that? He said use Signal. Yeah. It's actually a very interesting story. He said use Signal. And you know what? A lot of retail investors, right? They go and buy a stock in the US. And what is the name of the stock? The name of the stock is called Signal Advance. It has nothing to do with the Signal. Yeah. And Elon Musk is just talking about using Signal, which is a messaging platform. But he has no meaning talking about the Signal Advance, which is another company based in the US. And the stock market has rallied for this stock. It pushed from 40 cents all the way until $70 in 3 days. That is like close to how much? 200 times return. It's crazy.
Yes.
And after that, the stock actually go back. That's insane. After that, stock price go back to like $2. So imagine you are bought the share price at 70, 50, or even 40, or even $10. Then what are you going to do now, right? You don't know why. You just simply follow because Elon Musk said something. Now, probably one thing you want to do is you probably want to go to temple and pray, Elon Musk, please please tweet one more time in terms of using Signal, right? So that's something actually interesting story about all this, right? So I think last lesson actually, I feel that it's important actually probably is focusing on consistency, right? Like you just mentioned, investing, right? It's not a sprint, it's a marathon. You must look at a longer time frame. That's what you want to do, right? You don't want to actually just want to make money quickly, right? I mean, it's good that you make money quickly, right? But if you always have that kind of mindset, you might lose the money you earn easily in future. So for me, I want to actually make my money grow gradually and make the money work for me, right? So this is something I think it's very important. Focus on managing your risk, focusing on making the money consistently as well. And always, know what you are doing. Don't just blindly follow someone else, and always do your own research. Yeah, this is your tips here.
Agree. I sincerely agree with you. We all have to manage our risk management when it comes to investing. And in the meantime, before we invest in something, of course we have to do our homework, be prepared. And end of the day, it's like what you did mention. It's totally true. It's not a sprint. I'm not going to invest like say for only a couple of days and that's it. I'm going to end my investment journey. No. It's going to be a marathon. It's going to be for years, for decades. So end of the day, what you mentioned is totally true. Consistency itself.
Yes.
So we talk about the pandemic, increase in trading volume. We talk about Elon Musk, Signal. Yes. So which kind of reminds me, like say for example, the recent volatility when it comes to like say the tech stocks, the tech sectors. So anything to share about the volatility recently? What's your take?
Yes. So I mean, being an entrepreneur myself and also a tech people myself, I've been doing programming for 10 years, right? So I'm actually very keen and interested in tech sectors. So I also put in my money actually in terms of tech stocks because this is what I know and what I'm familiar with as well, right? So, but I mean, if let's say just a recap in terms of what happened to the markets, right? So last year when the pandemic came, there's a heavy sell down in terms of the financial markets. But after that, there's a, surprisingly, there's a V-shaped recovery. I think a lot of people actually never expect that in terms of the stock markets. And it's not just about V-shaped recovery. It even go even further, right, in terms of rally, right? So just look at the Nasdaq itself, the tech stocks. Since the bottom of last year, March, until, the peak, right? So it's actually about more than 100% return. And this is actually shocking for an indices, to have 100% return in a year. Right. And I got it. Recently there's some sell down in terms of tech sectors. And people might be talking about valuation of tech. It's actually very expensive. There's a stock with PE of thousands and all those as well. But look at this, right? When I look at the markets, I want to do the correlations. I don't just focus on one stock. I look at the whole markets as a whole, right? So I also look at Dow Jones and S&P 500. These two indices, right? It has hit all-time high again and again. The uptrend is still there, right? So, I mean, what I think, right, is actually the money are still in the markets right now. But, one thing actually I haven't shared just now is I'm actually a chartered market technician. So 3 years ago, actually, I decided actually to sharpen my trading skill and I take this CMT. So CMT It's just like the opposite to CFA, but it focuses more on trading, focus on charting, all those, and trading psychology. So what actually lessons I learned is when you invest in the markets, you don't try to predict what's going to happen, right? But you react into the movements instead. But when we first start investing in all those, we try to predict, oh, this is going to crash. I'm going to do this, right? And you know what? In the US market, so many people have been predicting that it's going to crash a few years ago, but until now, the US, printing the money, all those, the market has been keep going up and up, right? So where is it going to crash? It's something actually I think no one knows the answer, right? So there may be lucky ones that you got it right. But even if you look at the newspapers and all those nowadays, there are some people actually calling the talk. There are some people are saying that no, this is not the end yet because the Fed is not done enough yet. It's still going to continue with the money, the volatility, right? The liquidity out there. So if I'm going to say it's going to crash or going to continue, I mean, who are you going to believe, right? I know better than those research analysts or economists, right? But for me, is I can say, I look at a trend. So at the moment, I see that the trends actually for the markets are still there, right? But another thing actually I learned as an investor is, if let's say you are actually getting a bit uncomfortable in terms of what you have, that is about time to start thinking about taking some money off the table. So if let's say you invest last year and the market has been rallying, right? You have been making a lot of money, then why not actually make sales of stocks, right? Sales of tech stock, right? And recently, right, a lot of actually those recovery stocks, like cyclic stocks, actually are running because everyone is expecting the economy is going to recover because the whole world actually is pushing for vaccinations, and when the whole world actually recover from the COVID, right? So a lot of actually stock is going to benefit from this kind of recovery. And just like us, right? I haven't been traveled for the past 2 years, So if let's say the COVID ends, right, the first thing I'm going to do is I go online, I'm going to book a ticket, I'm going to have a holiday with my children and my wife, right? This is something actually I think a lot of people will do, especially in Singapore, right? People are finding ways to have a holiday, right? So this is where actually all those cyclical stock is going to benefit, right, over there. So if let's say you have made some money from the tech sectors, then if you are getting uncomfortable with this kind of rally, and I believe that this year, right, it's not going to be like a rocket like last year this way. There will be a lot of turbulence up and down over here. So if you feel that your heart cannot take it, right, then why not actually sell some of this and then probably funnel into those, let's say, dividend stock in Singapore, the REITs, or even let's say STI ETF as well. I mean, look at STI. It haven't actually recovered back to the previous top yet, right? It's still on the way. So, but they're actually paying out dividends as well. So if you, let's say you are getting uncomfortable, diversify your portfolio. Don't just focusing on one thing, right? Those people actually getting a bit uneasy on this. I guess they have been very concentrated on portfolio into the tech sectors. So yeah, this is actually some lessons I share. But one thing I just want to highlight a bit more is on tech sectors. I already sold some of those tech stocks, but there are a few tech stocks actually I feel that I want to keep, but disclaimer first, it's not actually for recommendations, okay? It's just to sharing in terms of what I thought, right? So I want to hold some stock, which is for future, right? So I'm talking about those space travel, those rockets, these companies. There isn't much choice out there, right? I mean, if you go and Google it, you know what I'm talking about. So what I do is I slowly accumulate some of those stocks. But what I'm prepared is I'm going to hold for a few years. But what is my investing thesis? Because I believe in future, the space travel is the next thing that people is going to go for it. Now we think about holiday, we are thinking about going to this island, and lie down at the beach, enjoy this. But in future, probably it's actually going to the space, right? Look at the Earth, look at the moon, right? This kind of space travel. I mean, as a technology person myself, I don't think it will be very, very far. But right now, of course, there's not problems, right? In terms of security, exposure, and all those kind of things to solve, right? But what I do is I'm prepared that this is going to be a future. And I want to actually fund the money for this for a long run. Yeah. So Ian, this is just some thoughts about the markets right now.
Cool. Yes, we hear you, and thanks for sharing the valuable insights with us and the audience today. Now, we still have 20 minutes, so I'm thinking, why don't we just proceed straight to the Q&A? I see we have quite a number of questions. Sure. The audience is excited to answer yourself and myself questions. So let me, like, say, for example, take the questions when it comes to Tiger Brokers and the industry, after which I'll pass the floor to you, then you can actually share more with the investors and the audience, like say, for example, when it comes to the investing climate in Singapore itself. Right now, let me see what are some of the more popular questions. Okay, we have a question asking, do you believe, like say, the dealers remisier business model will be extinct soon, since more self-directed investors are placing more trades on their own online channels itself? Now, no, not exactly. I always believe in there is always a market for everything. So technically, say for example, we have all of us are actually selling equities, but basically what happened is our needs are all different. Like I'll give you an example, like say Charles Schwab. Charles Schwab is doing zero commissions in the States itself. But if you take a closer look at their business model, basically a huge chunk, more than 80% is actually online, while they still have, like say for example, between 15 to 20%, if my memory didn't fail me, is actually via the financial advisors. So basically what happened is when it comes to our context in Singapore and in the region, of course, we will definitely have investors who are actually more attuned to having their own point of view and trading, do their own research, and they prefer cheaper rates to actually to do so, because end of the day is they do not require any form of support. But we definitely have another end of the spectrum, whereby another group of investors who prefers to be a handheld and guided on how should they invest in the markets, and they are not exactly very sensitive to the broking fees or charges. So to answer the question, basically it's no. If you ask me, there is always room, and it will not be extinct soon. Yes, not in the next couple of 3 to 5 years, definitely. Now, to move on, similarly, I see there is another question whereby Tiger Brokers actually adopt technology for the turnaround time for new investors to open accounts. What are our key unique selling points? And if let's say there is any content or analytic data sets that we believe are created by the end users. Now, earlier on the question I did share about, say, for example, there are two sets of clients. One set, it's they actually prefer to be handheld. They'll be prefer, like say, for example, financial advice from remisers or dealers itself. So they're not exactly a very cost sensitive. But there is another set of clients, the millennials, for example, they'll prefer to do their own research. So basically, for myself, previously when I invested, so what I like to do is I like to go to Google to take a look at what's the news articles, what's the flow for this few days, and from there, I'll actually see, hey, the tech sector is going to be interesting. Now, let me go and find some research analysts or reports about the tech sectors itself. And all this is actually, I do it online. And after which, when that is done, I'll go for my preferred broker to place the trade. So I have to go to different sources to actually look for different things. Now, for our Tiger Trade app, what happened is, as mentioned, we want to incorporate global markets and products all in one application for investors. So basically, what we're trying to do is just one app when it comes to news, when it comes to research, to placing of the trades. We want to be a one-stop solution for all. So the audience itself, if let's say you guys are not our users, let me share more with you. So basically for our app, inside we do have news providers, and one of them is actually a Refinitiv, who is actually backed by Thomson Reuters. So basically, they're very up-to-date news when it comes to the US side of things, or like say, for example, in Asia. So clients are able to actually to take a look at the news. It could be, say, for example, counter-specific or sector-specific itself. And from there, in our app itself, we also have a community, right? Similar to Investing Note. So you can get to, like say, to communicate with other investors who are actually interested in that counter, in that sector. You guys can exchange ideas, and from there you can even have, like say, stock screeners to actually to screen based on the valuations of the counters, perhaps less than PB value less than 1, price to book ratio less than 1. I'd like to screen what are the counters are there. All this is all available in our trade app in your mobile solution for you to place the trade, for you to place the for your investments. So to answer your question, basically we want to be the one-stop solution for all investors. Unlike our competitors while still trying to achieve this. We have achieved it, and we are trying to even better it moving forward, right? And okay, I see another question. The platform is fantastic. Will we be getting EU stock soon? We are considering adding more markets, that's for sure. We are now looking at the Asian one and also in terms of the European side of things. But when it comes to EU, perhaps not that near future, perhaps later part of the year. The team will actually evaluate and take a look at it again. Now, let me see what else. Okay, now this is interesting. And I see this is one of the top questions being asked. So is there any plans to actually to improve Tiger Broker's customer service? There is a long line of waiting. The PC software is great, but functions missing as compared to the mobile application. Withdrawal of funds is slow compared to deposits. Any plans for improvement for these 3 points? First of all, I would like to thank the audience for bringing this question up, because I would like to share with you guys what are our plans and how do we actually intend to actually improve these 3 points. So the first point is about the customer service. As mentioned earlier in the session, we are growing at a very phenomenal pace right now. So when it comes to our customer service, at the start of the year, last year, we actually had six customer service in the client services team. We call it the CS team. But as the time progressed, we doubled the team to 12. And because our growth actually far exceeds what we can handle. So first of all, I need to apologize. Yes, indeed, there is a long wait when it comes to the online chats and also the phone calls, and so to the emails itself, because our growth for clients actually far exceeds what we can handle for the client services side. So to share with the audience, basically, we are actively and increasing our headcount as we speak. Our client services teams is actually based in China itself. We hire people from internationally, South Africans, Chinese, just to cater to the language aspects. Apart from there, we are also setting up a small team in Singapore to actually cater to the growing demands. So I do apologize for the long wait. We hear you. In fact, we are looking to increase it right now in terms of the headcount and also have a night client services itself to actually cater to clients' needs. After all, most of our clients trade in the US market. Now, for the PC side of things, as mentioned, we spend a lot of amount of resources into the Tiger Trade mobile app. So if let's say you compare the mobile app solution as compared to the PC software, yes, I'll be frank with you. One is sky high, the other one is more to the ground itself. Now, so what happened is we did notice when we first set up Tiger Brokers was that in this time and age, we do a lot of things via our mobile app. So basically, we are always on the move. More people actually place trades via the app instead of sitting fixated in office or at home to place the trades. So I'll be frank, most of our resources initially is actually being deployed for our Tiger Trade mobile application itself. So we want to cater to all clients itself. So basically for the PC software, we are also constantly improving to actually add more functions, like say the corporate action side of things. Yes, we hear you, and yes, it's work in progress. Now, last but not least, when it comes to the withdrawal of funds, yes, withdrawal of funds tends to be slower as compared to deposits. Deposits, like say using our feature, the DBS DDA function is as good as instant, because we have an arrangement with the bank, so everything boom, done instantly. Now, when it comes to withdrawal, there is two aspects. One is the AML aspects, of which we need to perform instead of the banks, and the other aspect is we need to double check to make sure the funds withdrawal is to the correct person itself. As our business grow, we have more demands, or should I say more requests to withdraw, to actually transfer in funds and for withdraw out of funds. So we are automating it as much as possible for the withdrawal of funds. So yes, we will be improving on this aspect. In fact, I just tried a couple of days ago because I hear this feedback. So it's not instant. but it was done within a day, within 1 to 2 hours. So yeah, but nonetheless, we'll still look to make sure that it's instant moving forward. I hope I've answered your question. Now, the next one, it's when we buy Singapore shares through Tiger Brokers, are they deposited in CDP? Okay, yes, they are. But having said that, don't get me wrong, they are deposited in CDP under our nominees. Okay, so unlike, like say, the local brokers whereby you purchase shares, they'll be parked in CDP under your own name. But when you buy with Tiger Brokers for Singapore shares, right, we actually park it with our DA depository agent, which is DBS nominees. So from there, DBS nominees will actually park the shares with CDP under the name of DBS nominees itself. So technically, yes, but not under your name. It is under DBS nominee side. So nonetheless, the shares are still owned by you. And as per MAS regulations, our assets cannot be commingled with clients. So we have to separate our clients' assets and monies away from Tiger's assets. So it's safe. Now, to also to share with the audience here right now, we are in the midst of applying for our SGX clearing membership. So we're moving forward, we'll be our own clearing member like the local brokers. And we expect it to be done later in the second half of this year itself. Yeah. Now, let me not take up too much time. I would like to share. I would like Shannon to share with us more on the markets. Yeah. So Shannon, some of the clients are actually asking, what is the prospect of REITs in Singapore moving forward? Yeah.
Okay. So I think for REITs, recently, because of the treasury bond actually is going up, in terms of people might thinking actually the interest is going to go up. So there might be actually some, selling actually in terms of REITs. But generally, it really depends on what you want to do with these REITs investments, right? It's actually something actually I always, ask in terms of friends who ask me this kind of question. What do you plan to do? You don't want to actually, if you want to treat the REITs as a trading counters, then okay, it's different, right? You look at the different things. But if you want to actually treat the REITs as a long-term investments, collected dividends, right? It's different views. Like for example, right, now the COVID haven't fully ends yet, but if I go into a lot of shopping malls, it's still so crowded, and it's not even fully open yet in terms of the measures, right? So that's something actually I feel that in Singapore, the REITs is probably, it's a blessing for everyone because Singapore is small, right? In the weekends, we like to go to shopping malls and all those, right? Even, the online shopping is growing, all those, but some of the things actually still people prefer to go into shopping mall and do it, right? So the rental and all those is still there. So for me, right, I like to actually, accumulate in terms of that tips, in terms of this kind of REITs. But, you have to be careful in terms of if, let's say, the interest rate going up, and those REITs who are highly, leveraged, borrowing a lot of money and all those, you have to be a bit careful, right? So, this is actually my view in terms of that. Yeah.
Right. Okay. Thank you for sharing. Now, we have another investor. He actually did ask, as a beginner investor, what are some of the SG stocks that we can start off with or perhaps focus more on? Yeah.
Okay.
I think it's a
this
pretty
one,
common question here.
yeah, but this is actually a bit dangerous question as well, So if I'm not careful, I'm going to fall into problems as well, right? So what kind of stock
Careful,
yeah.
no advice. Yeah.
Yes, but as I said just now, right? If let's say you are just a new beginner on this, right? A lot of people would just start with a familiar branding, right? In terms of the companies that you have. But if you look at the banks, you look at those Essential, all those, they've been going up quite high, right? So if let's say you are a trader, right? I cannot really advise you at this moment, right? In terms of time frame. Some people actually, if I say buy now, then what if I say you buy and tomorrow go down, then in the end you sell, you lose money, right? So if you look at yourself, what do you want to do with this? If let's say you're just new, right? Something actually very easy is you just start with those index tracking ETF. It's actually some of things actually is very easy, right? So STI ETF, for example, you are buying into a basket of 30 component stocks. Is without actually having to understand individual stocks. Why I actually like about ETF is also because you don't really have to worry so much about, company, being this state or bank crime, all those, this kind of thing, this kind of unforeseen circumstances that might happen. I mean, which has really happened to me before. Unfortunately, actually, in the first few stocks I invested, one of them actually in the end the listing suspend because there's some problem in terms of the company. So this is actually a risk, right, over there. But if let's say you're just new, as I mentioned, probably don't want to take too much of risk, and you really have to ask yourself, what kind of risk profile you have. So if I blindly say something about a different stock, it's actually dangerous. But generally, if let's say you're new, you want to get a feeling of actually investing. How does it look like, right? You can try the STI ETF. This kind of ETF, even if let's say go down, you can still hold for longer term, right? So that's something actually I can share with. Yeah.
Good answer. Now,
Yeah.
one more question whereby the audience is asking, they are asking to see perhaps what are some of the sectors that's actually more dividend focused that investors can look at. Yeah.
I mean, dividend focus here, I mean, just I mentioned quite a few times, simple REITs, right? And also some of those like bank, all those, I mean, they also pay dividends as well, right? So this kind of stock actually, they pay dividends well, right? But sometimes, right, one of the things I want to share is sometimes you shouldn't too focus on the dividend yield as well. Like if you just go into open a scanner and look at the stock, which one has the highest dividend yield, then you go and invest into it, right? Sometimes it might be a trap. If the dividend yield is so high, then why actually people don't buy it? Once we will buy it, right, it will push out the share price. Once the share price is up, the dividend yield actually comes down, right? I mean, this is a formula in terms of the dividend yields. So I believe reasonable dividends yields, right? Let's say 3 or 4% or all those, right? But if let's say if you see a stock dividend yield, let's say it's 12%, 10%, if you actually triggers me like what's going on with this, right? So on one hand, this company might give you some dividends, but on the other hand, the share price keep going down. You have a suffer capital loss. So that's something actually you have to find a balance between dividends, fighting a dividend stock.
Right. Okay, we hear you. And one last question when it comes to investing note. Is investing note free to use?
Yes, I mean, interesting question. I mean, the investor is totally free for you to use, so it's actually a social network platform, something like a Facebook, but designed for investors and traders. So you can actually just open accounts, easily. If you are using Facebook and Google, just one click, you are inside a platform already. So I mean, from the question, I see a lot of people actually want to start investing in all those, right? So one of the things actually you can actually, as an investor, to start with, you can start sharing in terms of what you want to invest. Even some of those questions you can post inside a platform and see what other investors actually are sharing, right? And then if let's say you prepare to invest in a stock, why not actually you share about your trading plan, your investing plan, why do you want to buy it into the community, right? It can be into our platform or it can be in the Tigers community as well, right? So this is where you can get some, peers feedback, because we're just starting, right? We want to get some feedback from other people's, there might be some point actually we miss out, right? So this is where you get a very collective feedback in terms of investments. And remember one thing, right? You must actually don't just blindly follow in terms of what other people say, right? So you must do your homework, right? So investing, yes, it's actually free for you guys to use it. Yeah. Thank you for the question, man.
Right, good to hear that. Yes,
Yeah.
investing is free for everybody to use. Yeah, everybody should take note. Okay, let me steal the thunder for a while. I see there are some questions about Tiger and we're running out of time. So instead of showing the questions, I'll just answer. Yes, Tiger Brokers, we do offer Hong Kong options via the mobile application right now. For the desktop version, it'll be up soon, but you can use your mobile app to trade Hong Kong options. We also have stop loss features. And yes, we are considering adding the Bursa market to Tiger Brokers. Work in progress, still very preliminary. We will update the public once, if let's say we have more confirmed news. Yes. So, well, I've been hinted we are running out of time. So let me conclude by first of all thanking Shanison Lim, CEO of Investing Note, for joining us today and sharing with us your insights when it comes to the market itself. And I also like to thank the audience for taking time out during lunch timing today to actually to listen into this webinar itself. I hope you have an informative session. And yes, last but not least, what happened is there will be a poll at the end of the session itself. So please take the time out to actually to answer the polls. It's about say 4 to 5 questions only. And once again, I'm Ian Leong, Head of Business Development for Tiger Brokers Singapore, and I want to thank you for your time today. All right, thank you guys.
Thank you, Ian. Thank you, everyone.
All right, thank you, Shannon.
Thank you.